Ladies and gentlemen, does EU4 do taxes correctly? The higher your tax efficiency is, the more you squeeze money out of your lands, giving your country more Robux per month that you can then use for your own nefarious purposes. Would this, in reality, actually work? Let's take a look at economics to find out. There's a model in economics that can help us understand what exactly happens as you raise taxes. This model is called the Laffer Curve. The basis of the Laffer Curve is quite simple. At 100% taxes, labor incentives do not exist, and people will lack the will to do quality work, if any at all. At 0% taxes, the government gains zero money. So somewhere in between, there's a point where you maximize the government's income. Where exactly the optimization is something that economics do not agree on or know. If they did, we'd all have the same tax rates. After you reach the maximization point, you get a tax rate where the burden slows down the economy, people are more willing to finagle their finances to commit a little fraud, and the wealthy leave the country. While the Laffer Curve is a fairly new model, the idea of overtaxing your populace to death isn't exactly a new concept. One could argue that paradox plays to the average gamer understanding of the time period's mindset. Therefore, religion equals anti-science, more taxation always equals more money. However, more taxation also leads to a disgruntled populace, especially with how powerful nobility and burghers were throughout EU4's time period. Though that would be a separate complaint about the weakness of EU4 to focus on internal politics within a nation, where the game prefers to focus on external politics. You could also argue that the tax efficiency represents the ability of your country to reach the maximum of the Laffer Curve. So, does EU4 represent tax correctly? I'll leave the decision up to you. Go ahead and leave a comment if you've got further arguments on the matter. I've been the Archduck.